Good morning, everybody. It's Monday, June 12th, 5:28 a.m. Central Time. July corn futures up 9 3/4 at 614. December corn up 10 3/4 at 541 1/4. July soybeans up 1 3/4 at 1388 1/4. November soybeans up 6 at 1210 1/4. July Chicago wheat up a half cent at 630 3/4. July Kansas City wheat down 3 1/4 at 794 1/2. July spring wheat up 1 1/4 at 813. And Mackenzie, we hit 10,000 YouTube subscribers over the weekend. Isn't that exciting?
It is pretty darned exciting.
10,000 on YouTube in the grand scheme of things is like nothing. But you got to think, what percentage of the population cares about corn and soybean prices like on a daily basis? Is it 1%?
Oh gosh,
No, it's not even 1%. It's like 1/10 of 1% at best. So, in regard to that tiny little segment of the population that makes decisions when it comes to corn and soybean prices, things like that, I guess we're a big deal. I don't know. But thank you guys for subscribing on YouTube. We have just as many people that listen on the podcast. So, thank you guys for helping us to get here. Really appreciate it. Let's start off with the weather today.
Definitely. Weekend rains across the U.S. Corn Belt were spotty. The radar was active across the Corn Belt all day yesterday, although rainfall totals were highly variable. Some farmers saw nothing, while others caught 1 to 2 inches of rain or better. Rains continue in the far eastern Corn Belt this morning as part of the same system. The forecast offers only limited rain to U.S. corn and soybean areas over the next 7 days. The Euro and GFS offer additional rain beyond the 7-day period. Both models introduce some ridging into the Corn Belt next week. A high pressure ridge locks in high atmospheric pressure and locks out precipitation.
All right, we'll get back to the dome here in a second, but let's go back to these radar snapshots. So I don't have any good observed precipitation maps this morning because they take like 12 hours or so to update at least. They're based on like, rain gauges, essentially, or weather stations. But if you look at this radar, this would lead you to believe, just at a quick glance, that there was like this big, broad, sweeping storm system across the Corn Belt, right? And this is just, I picked like 4 snapshots from yesterday into this morning. The fact of the matter is that a lot of these areas, like if you guys are watching on YouTube, a lot of these areas with like the light green and the blue, they caught nothing. And the areas that did do okay when it comes to rain would be these areas like in the yellow or the red. When we sent out our pre-open weather video yesterday, I had a ton of responses with different rainfall totals. Everything from 0 up to, Joe, I caught 2 inches. So it was highly, highly variable. So I'd say in regard to the weekend system, spotty would be the key word. Very, very spotty, much spottier even than I had thought when we talked about weather last night. Now you look at the forecast, and there's not a ton behind this necessarily. I mean, you've got some rains for this like southern eastern portion of the Corn Belt, I guess. You've got Iowa, Minnesota, Dakotas, Nebraska kind of lacking here in the next 7 days. The Euro out through the 22nd has some more rain, but a lot of it's toward the back end of that 10-day period. Same thing with the GFS. The extended stuff is very, very difficult and really not very reliable. There is some talk about some ridging next week, and when you get these high pressure ridges, some of you guys have heard me talk about this in the past. It's the dome of doom, right? The dome kind of locks in high pressure. It locks out precipitation. This is a snapshot of what this might look like early next week. If you get one of these ridge situations, this is something that essentially locks out precipitation, and this may be the deal next week. So the row crop markets are higher this morning. I think that the rains over the weekend were just not enough and too spotty. The forecast just doesn't have enough out there, and you've got a drought monitor that continues to look worse. So we've still got a situation where we appear to be adding weather premium, I think.
So if you guys are not already subscribed to our premium content, you sure need to do so. Joe, would you elaborate on these weather videos we do?
All right, first off, I mentioned the YouTube subs. We're up to 10,000. Guys, the premium subscribers, if you guys are premium subscribers, you make our world go around. None of this that we do here, the podcast, YouTube, none of this is possible at all without the premium subs. If you guys all quit on me tomorrow, we're out of business, right? This YouTube doesn't pay any bills. So, guys, on Sundays, we do a pre-open weather update. It comes out about 6 p.m. Central Time before the grain markets open. Talk about weekend weather, how the forecast has changed, maybe what it means for the markets. Also, Mackenzie, you and Brian split. We're on Friday, did a quick USDA snapshot that came out shortly after the report. And then also I had a video last week that included a free balance sheet tool that you can download. Talked about new crop corn demand and what USDA has penciled and why it could be substantially too high. If you guys want to see the premium stuff, go to standardgrain.com this morning. This is a $50 per month subscription. You can sign up today with your credit card on your phone or computer. It takes about 1 minute. No other fee, no other obligation. Cancel at any time, guys. Just a ton of info direct from us every single business day.
So Friday's USDA report featured no major surprises. USDA did not adjust the 2023 U.S. corn or soybean production estimates. We'll see new acreage numbers at the end of the month following a fresh round of surveys. As expected, the USDA cut export projections for old crop corn and soybeans. Argentina's production estimates were cut, while Brazilian production estimates were increased. USDA will release the more important planted acreage and grain stocks report on June 30th.
Nothing exciting here at all. I know a lot of you guys have issues with the corn and soybean yield estimates in particular that USDA has plugged in. But what they did here, they just stuck with procedure, guys. It's not normal for USDA to change those yield projections in June. They typically wait till July or August until they have more data. And that's what they're going off of right now. So if I had to guess, given the drought outlook, I'd say, yeah, those numbers probably need to come down a little bit. But if it starts raining all of a sudden and you see a big weather shift, maybe not. I don't know. I'm not one to try to predict the yields here in the middle of June. But in any case, the report was very much a non-event, and we are very quickly back to trading weather here.
Large money managers continue to reduce their net short position in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending June 6th, the funds were net buyers of 2,000 contracts of corn. They were net buyers of 12,000 contracts of soybeans, and they were also net buyers of 4,000 contracts of SRW wheat for the week.
So funds are still net short corn, and to see if in history, I did a premium video about this a couple of weeks ago. If the funds go into the growing season short, almost any time there's some sort of crop scare event, they cover the entire short and then they get long. It happens a lot. So we could be in the process of seeing that right now. It's not a guarantee by any means. No such thing in this business. But if you were to see funds cover this entire net short in corn and actually go long for a minute here because of weather, that would not be unprecedented. Funds are still long, just a kind of a minimal amount of soybeans. Still a big time net short in SRW wheat, and they just have not seen the reason to cover that. I don't know what the reason would be. It would probably have to be something with Russia. Russian exports disrupted. That's what I could see right now because U.S. wheat is still overpriced on the export market.
Fed officials are expected to pause interest rates at their upcoming meeting on June 13th and 14th, which is this Tuesday and Wednesday. The pause will allow for an evaluation of the economy after recent strains in the banking sector. With inflation and labor market data coming in hotter than expected, policymakers are also anticipated to signal that more rate hikes might occur. Fed officials could alter their decision at the last minute, with the May CPI and PPI data being released during the meeting. A hot reading could cause officials to abandon their plan for a pause and instead impose another 0.25% increase.
Yeah, tons of economic data this week. You've got CPI, PPI inflation data, and then the Fed out Wednesday at, I believe, 1 p.m. Central Time with the interest rate announcement. Treasury markets this morning say that there's a 76% chance of a pause and a 24% chance of a quarter point hike. I don't know. I know that Powell doesn't want to be the one who quits too early on the hikes, but they could pause here in June. And if the inflation numbers start going the wrong way, they could absolutely just start hiking again. So for the moment, it appears as if a pause is imminent. A lot will probably hinge on, of course, forthcoming inflation data, that sort of thing. The recession is still nowhere to be found. Unemployment's still low. Stock market made fresh highs again just on Friday, I believe. So I don't know. I don't see it, but things are still expensive and inflation is still an issue, certainly.
Canada is joining a trade dispute that the U.S. initiated regarding Mexico's restriction on the importation of GMO corn. American and Canadian officials have labeled the ban unscientific. The U.S. has requested dispute settlement consultations with Mexico. under the U.S. Mexico-Canada agreement. Canada will partake in the consultations as a third party. If the consultations fail, the U.S. could request a dispute resolution panel, which could lead to tariffs against Mexico.
We've talked about this in the past, and you're down to Mexico's pretty much already agreed to import GMO corn from the U.S. like for feed. So your yellow number two, which is the vast majority of what they import from us, that's not the issue. The issue is like food grade stuff, white corn, that sort of issue. The trade reps office is doing their job here. They're trying to cover all their bases. But in terms of you guys watching, for the majority of you, this is not an issue anymore. I felt like we needed to cover this. If Bloomberg's talking about corn bans, we need to talk about it because it means everybody's watching it. But this should be a non-issue for most of you guys. Cattle market had another wild week.
It was wild, definitely. Live cattle futures were mixed on Friday. Not a lot of big moves were made. On the week, they fell $1.05. Feeder cattle futures were also mixed on Friday. They fell $2.90 last week. Cash cattle trade last week was up once again. The North led the way, selling fat cattle at $190. That was $2 to $10 higher compared to the previous week. In the South, fats were sold at $185 to $186, which was $4 to $10 higher week over week. It was another monster week for boxed beef prices last week. Choice boxed beef closed Friday at $332.93. That was up $23 over the previous week, which was a 7% increase. Select boxed beef closed Friday at $305.71. That was up $14.78 on the week.
Crazy stuff. Outside markets this morning, guys. U.S. dollars off just a little bit. Stock market's mixed. Bonds are mixed. Precious metals are mixed. Crude oil under a little bit of pressure, down at $1.64 in the July WTI at 68.53. We do have a 3-day weekend coming up. Just a note on that, guys. Monday the 19th will be closed for the Juneteenth holiday. So you got a normal close Friday. We're closed Monday. We reopen Monday night this coming weekend. Everybody have a great day. Have a great week. We will talk to you tomorrow.